Ladies and gentlemen, welcome to our masterclass on digitalization, sustainability, and the strategic roles of accountant. My name is Goh Kia Hong. I'm an assistant dean of MBS undergraduate program, and I teach accounting, audit, and risk management in my role. In this morning, I hope to share with you some of the exciting roles that accountant plays in today's world, as well as how MBS prepares our Bachelor Accountancy undergraduates to take on some of these exciting roles, and also to share with you how we typically conduct our seminars in MBS. But before I start, let me debunk a myth that you may have. To a pessimist, he may see the cup as half empty. An optimist will certainly see it as half full. A lot of people would choose to think that accountants see the grass as imbalanced. But really, the role of accountant is more than balancing the books. The role of the accountant is a lot more strategic today. And this is largely driven by the macro trend that is ongoing. Number one, rapid change in technology and the harness of powerful technology and data out there. This has revolutionized how businesses are done and how accountants can then use this data to create greater insights for greater, more useful decision making. And secondly, the greater drive for corporate sustainability. With this drive, strategies are changing, operations are changing to meet up with the strategies, products are changing, and the way decision making are changing. And an accountant has got a big role on that. So how does MBS prepare our undergraduate in these two mega trends? The first one on technology. Well, we have put together a suite of very exciting tools and applications to equip our undergraduate to prepare themselves for the working world. Tools like Python, coding, visualization, SQL, data management, RPA, robotic process to help business automate, and then audit, analytics software like ACL IDEA to help the auditor perform his work a lot more effectively. But don't get me wrong, we are not a computer course. We are an accounting course in the business school. So we therefore introduce these tools to help the accountant do his job better. Right? So I give you a few illustrations. For example, the increasing availability of data now allows the auditor or the accountant to run very exciting visualization that can create very interesting business insight. Take a look at this box and whisper chart, where an analysis of all the transactions entered by these 5 individuals or these 5 personnel is shown. Right? So what can you tell from this visualization? Well, the first observation may be the box plot on the right, Madam Ho. One may question, why is Madam Ho giving such a wide range of authority, entering transactions for as low as 20,000 to as high as 40,000? Is he a senior management personnel? Is he an accountant? If not, normally would expect the user to be confined to his area of work. But what is more alarming perhaps is the user in the middle, Chong. Right? While Chong is operating within a narrow range of transaction, which appears right, but then Chong created some very unusually high, or what we call outlier. Then the question then is, why is Chong entering transaction as high as 60,000? Is it within his authority? Was there a fraud? Was there an error? So therefore, with the increasing use of data and powerful visualization tool, accountant can now use this to create insights and to make better decisions. Second example, predictive modeling. This scenario is one where a retailer owns 50 stores countrywide. Right? So now, which other stores requires more attention? So with the use of powerful predictive analytics, he can use it to predict the sales of each of the stores, using internal data such as store size, proximity of the store to the subway, the experience of the store manager, and external data such as the weather, the mall traffic. So by putting all this data together, the model will then predict the sales that the store is expected to make, let's say for the month. So if you were to superimpose the actual sales on the predicted sales, it appears that most of the stores are fine. They perform as per predicted, perhaps except for 4 stores. Stores numbers 19, 33, 36, 40. So with powerful predictive modeling that we now equip our graduates with, they can then use it to value add to the business, identify risks, monitor problematic areas, and then add value to where businesses can improve. Third example, use of text mining, very common. This is an example, a real example of a restaurant operating in a hotel where they want to understand how well are they doing in their products and offering, how are the customers receiving the product. So they did a sentiment analysis. You see the two comments that I picked up from a huge volume of unstructured data. The first one says, booking required me to pay $20 to have a window seat, a fee that in the end had no extra added. So apparently this customer wasn't too happy. So you put all this together, you harness this data, you analyze the positive and negative sentiment, you then create a sentiment analysis. So this sentiment analysis then allowed management to understand where do they stand. In this case, obviously, the sentiment isn't very good. It is slightly below zero. So that allows the management to now intervene, right? So therefore, you realize these are not the traditional bookkeeping role of an accountant. Now, accountant is involved in harnessing data, analyzing data, structured, unstructured, to add value to the businesses. Second mega trend, sustainability. This is no longer a joke. This is serious business now. Every country, every companies are now moving towards net zero strategy by 2050. Meaning by 2050, every company or every country, including Singapore, has committed that we will be net zero. Net zero means we will not emit we will not emit any carbon dioxide. So with that in mind, strategies need to change. Operation need to change. Traditional equipment that uses traditional combustible energy sources may have to be decommissioned. New renewable energy sources would have to be invested. So as the usage or the emission of carbon is expected to go down, the role of the accountant is expected to go the opposite, right? Because then we have an important role in terms of having to harness data, to analyze the situation, to appreciate how carbon is to be accounted for. Really, carbon is not straightforward because it falls into scope 1, scope 2, scope 3, the direct carbon that you contribute, the indirect that you contribute, as well as those that are contributed by your supplier that you really have got no control, direct control, right? Operation review, project evaluation, reporting, so on and so forth. So how does MBS prepare our accountancy graduate in the area of sustainability? We have got a entry-level course at year 1, where we create, we get our undergraduate to appreciate what is the environmental, what is the social, what is the governance implication. Then in our various modules, we then put in place all the related sustainability topic that equip our students ready for the job. So you may be doing a valuation module, but you must know the implication of sustainability in the prices of the companies that you are valuing. Right? And then we have put together some, the beauty about MBS is we are a business school sitting in a diversified science and technology university. So we have put together, university has put together some more than 100 courses where the student can pick and choose and do a second major or a minor in some very exciting sustainability topic. So with that said, let me now shift gear, having share with you some of this broader macro trend and how it's going to excite the role of the accountant moving forward. Let me now share with you how we typically, or how I typically run my class, and this is one of the course, enterprise risk management, that I do. So what is risk management? Well, again, there's some myth out there. Perhaps the word itself doesn't quite do justice to the concept. So a lot of people, connect risk management as reduction of risk. So if that is the understanding, then again, we are not adding value to business. Risk management is about taking the right level of risk, balancing between risk and opportunity to strike a balance and create maximum value. So it is about business needs to create value, implement a strategy that create maximum value. For example, your business may be launching a new product. So now what are the risks? What are the opportunities? Right? Your business may have decided, or may be thinking of going overseas. You want to build a factory in China, you want to penetrate the Indian market. Where are the risks? Where are the opportunities? Therefore, ERM allows the businesses to to come up with a sweet spot where you maximize value by balancing between the two. Now let me take a poll to really illustrate this point. Okay, great. If you may honestly tell me what you think. Right? If you are a manufacturer of a basketball shoe, doing very well, then suddenly the National Basketball Association comes up with a rule and they say, no, your shoe is banned because it gives the user an unfair advantage. What will you do? Will you lodge a protest, just like many of us were? Will you exit from the business altogether? Will you slow down your production or stop production, or will you increase your production? Well, we got a very interesting poll result, which I'll share very shortly. Good. Keep it coming. Okay, great. Maybe now let me just pause here and share with you the result. Okay, great. You see the result, right? Majority say stop production, right? Some say lodge a protest. That one no surprise, because we are Singaporean. Then quite a small number exit, and then another small number say increase production. So now this is enterprise risk management. If you see from the risk side, you may stop production. You see from the opportunity side, maybe not. And this was a real scenario happened to a real company. So this company called Ryan and Adam was a company that does exactly that. They were in the sneaker industry producing basketball shoe. Then somewhere, and this was reported in the Straits Times, somewhere in 2016. Then somewhere in 2010, the shoes were banned because the Basketball Association felt that the shoe gave the user an unfair advantage, and therefore they were banned from national, big national competition. What did the company do? The company did the opposite. They increased production, and then because of that, the sneakers, started to fly off the shelf. Really, they saw an opportunity because the shoe were really catering to the mass market. So what if it's a ban? You and me may love to buy the shoe because we love to jump higher and beat our friend in our basketball match, right? So they saw that as an opportunity, they exploited that, and this, ladies and gentlemen, is enterprise risk management, striking risk and opportunity, creating maximum value. So in ERM, we first start with the governance and culture, the tone at the top. What is a risk-aware culture? So in every organization that you work in, you must know how much risk that you can take. And this must obviously be articulated from the management or the board, right? If you're in a small company, it doesn't matter really. If a customer come and bang at the door, what do you do? Do you refund or do you not refund? You can always turn your head back, ask your boss will tell you, right? But in a big organization, we got no opportunity to ask. We have to know what to do at every juncture of the production and service line. So therefore, a risk-aware culture will then tell the employee exactly what to do, how much risk to take, and then that must be embedded into the objective, how the company execute its strategy, and then the risk performance. Let me illustrate this with some current newspaper clipping. Governance. There was this casino somewhere in a city in Ohio. Well, the employee, the cleaner employee, mop the floor, and then as usual they put a wet floor sign, the one that we typically see in McDonald's or the shopping mall, the yellow sign. Then Murphy Law says whatever can go wrong will go wrong. The sign collapsed, nobody bothered. A customer walked past, fell down, broke her back, then sued the casino. Then the judge obviously gave the judgment to the customer. The casino had to compensate. But that's not really the issue. The issue was what the judge said. The judge says the company lacked a risk-aware culture at various levels. So what happened? What did the company do? What did the company not do? Well, the company reprimanded the cleaner for not making sure that the wet floor sign stood, and it stood there. But what the company did not do was there were a lot of other employees who worked past the place. None of them bothered to even do anything. None of them bothered to pick up the sign to make sure it's properly displayed. None of them feedback to anybody, so they just left it there. And then worse still, the management took action against the poor cleaner, but nobody else. Therefore, the judge then made a very critical comment that the company had a very poor risk-aware culture. And other than putting a wet floor sign, all other aspects of risk management were absent, right? So this is a classic example of tone at the top. Next, embedding risk management into your strategy. And this is one of the pictures that I took, I think last year, somewhere in the Heartland shopping mall. When I walked past, and I saw this car showroom or car pasar malang of sorts. Then my friend was beside me. My friend was driving a proud Audi driver. Then he said, "Hey, brother, cannot. How can my Audi be sold at a pasar malang like that?" So he was apparently very upset. Then I started thinking, wow, is there a case of, again, risk appetite statement not clearly articulated? Being a salesman, obviously you would love to sell more cars. But is this the place that the brand, the company wants to be, right? So a risk-aware culture. Risk-aware culture means everybody knows how much risk to take, and you take the amount of risk that is in line with the product, the branding, right? So is there a case where the risk appetite or risk-aware culture has gone wrong? Then quite incidentally last night, I won't tell you where this Heartland shopping mall is in case I offend any one of you. But I can tell you the next slide. Last night I was at the what is the place? Great World City. After renovation, fantastic place. Then I saw a car showroom. Wow. Again, it was in the middle of the shopping mall. Very not that it's posh per se, but really is what the brand stands for. So I'm not a Merc driver, I'm not an Audi driver, I'm a driver of a cheap Japanese car, but really, we're talking about risk management, risk appetite. So if you clearly articulate your risk appetite statement, if the employee has got a very clear risk-aware culture, then you know where you are, and then you will not end up spoiling your product or your brand. Let me take another poll. Imagine we are done for our MasterClass. Physically, now we are done. So I offer it to send you back. Number one, I can send you back in my Shell petroleum truck. Number two, I can send you back in a typical transportation lorry. Now, which one would you go? Which one will you choose to reach home safely? Come, pick a choice. One or two. Oh, interesting result. Okay, good. Okay, maybe let me pause here. Show you the result. Exciting. Well, it probably doesn't surprise you that most of you choose truck number 2 because truck number 2 looks safe. Truck number 1 looks dangerous. Right? So that is another very good example of enterprise risk management. We look at risk at the surface. But is truck 2 really safer than truck 1? Have you considered what the company would have already done? Truck 1, Shell would have likely done a lot of things to make sure that the wall of the tank is reinforced. Chances of an explosion in the event of a collision is minimal. If there's any fire, likely that the fire extinguisher, the driver are all well trained to execute evacuation drill. And not to mention the driver is likely to be very well trained. So therefore, you consider all this, truck 1 may not be as risky as truck 2 because truck 2, number 1, we don't know what is inside. It could be explosive, we never know. And the surface of the truck likely to be not fantastic. And the driver is likely to be another chong driver like you and me, right? And then we will not consider the interaction effect. Imagine you are driving on a road and then truck 2 overtake you, what will you do? You will ram and overtake that guy and show that guy some face. That's us, right? What else truck 1, if truck 1 overtakes you, what do? You probably quiet and let that guy go, don't mess around with the Shell truck. So there again, the interaction of all the other users will affect your risk management. So therefore, in a risk management course, that's what we do. We talk about risk, we talk about the considering risk holistically, how the environment, the other people interact to end of the day result in the risk. Okay, the slide. Okay, so maybe to sum up risk management, what do? We then evaluate by plotting the risk on a risk map. So in the risk map, we have a scale of likelihood in the y-axis. We have a scale of impact on the x-axis. So these are the 4 risks in the context of the same example, logistic. So if I'm in the business of logistic, I have to deliver my product to my customer within 24 hours, 95% of the time. These are my 4 risks. right? Truck accident may happen, vehicle may break down, there may be traffic congestion, there may be drivers getting into fine and penalty, and I plot these 4 risks in the likelihood and impact scale, right? So that I can then now prioritize the risk and decide what I want to do, right? How I want to manage the risk. For risk number 1, the one that is highest in terms of likelihood and impact, this is what we call a severe risk truck accident. Because if a truck accident were to happen, it's going to disrupt my whole delivery and properly disrupt all the other subsequent delivery, because the driver can't come back and do his second round or his third round. So therefore the impact is likely to be severe. Likelihood may be also high. So therefore I then may want to zoom into the risks that are severe to then analyze the cause and the effect. And this is what we call a Bowtie analysis. So very quickly, a truck accident is a major risk. Let me look at the various causes by talking to my employee, by talking to my supervisor, talking to my customers. So why does a truck accident happen? Well, the driver may tell me, oh, road debris lah. Sometimes the road, a lot of debris, a lot of construction going on, because of that accident happen. Then I ask him, keep asking him, this is what we call the 5 whys. Why? You are a seasoned driver. Surely road debris can't result in severe accident, right? At most a punctured tire. Then the guy tells, yeah lah, boss, you're right lah. Probably it's because fatigue more than debris. Because we have been working very hard, very tired, So because tired plus road debris, accident will happen. Then you probe further, why that fatigue? Don't we give you enough rest? Then one thing lead to another, and then he will tell you lack of driver. Yes, the schedule allows me to rest, but because of lack of driver, sometimes I got to stand in, I got to cover my colleague, therefore I cannot have enough rest. Then you ask further, why lack of driver? Maybe illness, maybe dengue, maybe COVID. This is what happened to SMRT Transit, right? When the drivers were on COVID. So this is what we call a root cause analysis. So you start looking at root cause. The other root cause could be mechanical failure, road condition, unexpected maneuver by other drivers, so on and so forth, right? So these are the causes. Having looked at the cause, I then look at the consequence, right? If this happened, if there's a truck accident, what are the consequences? One of them is obviously reported in the press. Right? If this is picked up in the press, then bad news, right? So what happens if it's reported in the press? What else can happen? Well, then reputation damage, right? Customer will be angry, customer may not start buying from me anymore. Then again, I look at all the other consequences, right? Why do I do this? I spread my risk by looking at the causes, by looking at the consequences. So that therefore, enterprise risk management allow me to put in my response. Can I put in preventive controls to prevent these causes from happening? Of course I can. If I do it, then the risk won't happen. How do I prevent road debris? Well, I cannot prevent road debris, but I can prevent my driver getting into accident because of road debris. Perhaps by defensive driving. Send my driver for more defensive driving course. So given the adverse driving condition, the driver may be able to maneuver better. How do I prevent fatigue? Can I enforce mandatory rest? Just like the pilot, the airlines are very good in this. The moment there's flight delay beyond certain hour, sorry, flight cancel, the pilot needs to rest. Full stop. You cannot stretch him because life are at stake. Lack of driver, can we put in place improved scheduling, maybe a pool of part-time driver to make up for the absenteeism? How do we prevent illness? Vaccination. This is the magic word for the day, right? Plus booster, right? So we can put in preventive control. But if it still happen, knowing the causes, we can put in corrective control, right? How do we prevent our accident being reported in the press? Can we build relationship with the media? So if you've got good relationship, then if they report, they won't report so adversely. But if you do get reported, then how? How do we prevent or minimize the loss of reputation? Well, if you do good work, sustainability, CSR, when people see this company as a good, responsible company, they tend to be more forgiving, right? So this is ERM, very interesting. Therefore, I hope through this sharing, give you an understanding how we run our classes or how I run my classes. And it is not as boring as debit, credit, bookkeeping. It is a lot of business strategy, it's a lot of value adding that the accountant has got to do in this future economy. So let me pause here. And then take questions if you may have on what I've shared on the mega trend, on the role of accountant, or anything about MBS or our program. So you know, if you could click on the QR code, join our Slido, and then you may post your question. Let's take this as a candid question, anything. Just don't ask me about my salary, which is small. That's why I drive a Japanese car. Come, anybody? Question, anybody? Oh, my presentation is so thorough that there's no question. Oh, were you not listening to me? Should I repeat all over again? No lah. Okay, come. Let's just wait for maybe a minute or two. Surely you got a lot of burning questions, right? Okay, let me see. Questions, are they coming in? Let me just read off to you. Hang on. Can you roll out? Okay, if you can't see, I read to you. Very exciting question. Okay, number one. This is a question that we always hear in every outreach that we do. How can I as an accountant make sure that I will not be replaced by advancement in technology? Right? Don't worry. Number one, that's why I share with you our digitalization strategy. We equip our students on appreciation of some of these latest tools and technology, so that then you can go out and you are ready for the job. I'll give you one example. I was just speaking to an alumni, one of my former students, just quite recently. So he's telling me, wow, now different. Not like the day that I did my internship. When I started working in this commercial company, I cannot rely on my IT manager anymore because everybody is very busy. I have to self-service. So that's where he shared with me that the SQL class that we did was helpful enough for him to go and pull out the information that he needs for him to do his reporting, for him to do his analysis. So therefore, by equipping you with some of these digitalization skills, you can now help yourself to some of this data, some of this information to do your own work, to create value, right? The same guy told me that, well, he was attending a management meeting. Because of the visualization tools that he had learned, he's now able to create very interesting reports for the senior management to size and dice, and then for that he got a lot of a pat on his back. So really the role of accountant, number one, is not about relying on people to produce report analysis. You can add value by doing yourself quite easily. Yeah. Of course, beyond MBS, as you start working, things are always changing. By the time you graduate, the IT landscape would have already changed. Therefore, the government always say lifelong learning. You got to go and pick up your own skills in the area of new tools, new technology. By then, Bitcoin may have been, or smart ledger could have been the rule of the day. But if you work in a reasonably good, big-size employer, which are most of our employer, you are likely to have that avenue where they will upgrade, the employer will upgrade you. So not to worry. The bottom line, I think, is attitude. Once your attitude is right, don't stop at accounting, bookkeeping per se. Your job is to value add. Then you will know how to value add. Ken, I hope I have answered the question. Okay, good. What about next question? Okay, good. Somebody asked, can you give me some example of the roles in sustainability? How do students prepare for these roles? As I said, moving forward, I shared earlier on, as the carbon emission is likely to go down, the role of accountant is likely to go up, right? Of course, you ask a lot of people out there, they will say the role of accountant is reporting, including sustainability reporting. So sustainability reporting is about reporting the sustainability performance to the outside reader, right? So obviously accountant plays a big part in that, right? So your role is to go and capture the information and then go and understand the needs of the user and then present your sustainability performance to create value to the organization. But if you ask me, that one is just one part of your role. But your role, if you understood what I've shared about risk management, with our accounting background, training and knowledge, you can create value by contributing to the company's strategy, right? So if you're a good accountant, if the business development manager wants to launch a product, he's likely to approach you. Hey, brother accountant, I'm going to launch this product. Can you tell me what are the upside, downside? Because you are an accountant. Not only do you know number, you know risk management. Same thing with the boss. I was sharing with you about net zero strategy. Every company out there is now scrambling to achieve net zero by 2050. Singtel, for example, right? One of the biggest contribution to carbon in Singtel is a data center. So they run on data substation. So they are emitting a lot of carbon. So companies like Singtel, if you work in Singtel, they will be scrambling to come up with a strategy to neutralize the carbon emission. So then again, if you're an effective accountant, management will come to you, accountant, please let's sit down together and think through what can we do. Can we do this? Can we do that? What are the cost implications? What are the risk implications? So therefore, the role of accountant is wider than that. As the company decide to divest in some of these traditional equipment that uses combustible energy into new equipment, again, the accountant will have to come in, cost-benefit analysis. Right? Where is the break-even point? Right? Invest in machine A, invest in machine B. So the role of accountant becomes a lot more meaningful, a lot more value-adding. If you ask me, sustainability reporting is just probably the minimum that we could do, we should do. Right? Okay, great. Any other questions? Oh, what are some looks like some interest, some quite a number of audience got excited by risk management. So this question: what are some common techniques used by accountant to balance risk and opportunity? Well, there are a lot of frameworks that we will share with you in the course of our module. At the same time, it's very much common sense approach. So it really depends on your business acumen. It really depends on the opportunity. Just now I was sharing with you, if the company wants to say, let's say, globalize, invest in, set up market in India. What are the risks? I mean, to find the risk quite easy lah. We just have to talk to people, we talk to the customer, we talk to the supplier, we scan the environment, we look at all the regulatory risks, we do secondary research. But what are the opportunities? That's where your business acumen come in. So it's a mix of primary study, it's a mix of talking to people. So in the course of the course, we will teach you various tools, but then again, the bottom line is business acumen. So if you're an accountant with a good business acumen, you can be rest assured that you're very busy. Everybody will come to you. The marketing guy who needs to launch a marketing campaign will come to you. Hey, brother accountant, I'm going to do this social media. What do you think? Is it going to work? Is it not going to work? What are some of the things that I may have not thought of, right? The IT guy who's going to invest in an IT project will again come to you, right? So, great. I hope I've answered the question. Any more? Good. Maybe we take the last question if there's any. What sort of person would be a good fit? Interesting question. But interesting, but very good question, right? If you are the old school, where you want somebody quiet to go and do your work, then I think it's probably wrong. So the old, persona of an accountant, somebody who quiet will do his job, produce his report on time, works overtime so that he can meet his deadline. No, I don't think so. I mean, this is a given. The accountant needs to be a lot more dynamic than that. So as I mentioned, a lot of our work involves interpersonal, right? So I remember when I was an auditor, what I liked best was talking to people. You got to be able to talk to the client to make the client like you, so that the client will help you to solve your problem, right? But if you are a square guy who go and ask the client, can I have this report? The guy, the accountant, the commercial accountant will say no, then you're dead. Right? So you got to do the soft approach, people management, negotiation skill. So it's really about personality, it's really about the mindset I mentioned. So great. I think we have covered quite a fair bit. I hope you have enjoyed the the masterclass as much as I had. If you have any other question, please feel free to drop us an email. We would love to continue to engage you.